of you for still being here this late afternoon. Hope you grab your coffee or toilet break or whatever you need. We're about to start a second session. Now, right before we go, just wanted to let you guys know that since we are overrunning slightly, we're supposed to end at 5 o'clock. So we'll try to wrap this up as quickly as we can. And then for the further questions, we're going to head over to our LongHash office space, and there we can take a further deeper discussion there.
And the booze is on you, right?
Yes, there'll be something.
Free alcohol from LongHash. There's a lot of money, by the way. But I'm the blockchain monk, so I don't drink. But you guys can drink, and so no, it's great to great to see so many people come here on a working day, on a Monday afternoon. So it's almost like family, right? I mean, 30% of the people here are friends, and it's the Singapore family. So I'm happy to do this in Singapore more than anywhere else. It's in fact the first time I'm doing the whole, protocol and security token thing anywhere in the world. We're doing the same thing in California in 10 days. So it's almost like a trial run, right? To see if I survive this session, alive. So no stones thrown, no tomatoes thrown. So I think I'm doing a good job. So the security token offering is the next wave, right? There are $300 trillion of real-world assets that do not have liquidity. Real estate, gold, diamond mines, art, all these things do not have liquidity, right? So the security token offering wave, the premise of that is to create some kind of a liquidity for these illiquid assets. So there's this beautiful saying, different forms of energy vibrate at different rates, like a river. Energy flows from higher to lower levels, moving through repeating cycles, expanding and then contracting like our breathing, right? The Indians call it prana, the Chinese call it the chi, right? The breath of life. Since everything in the universe is a form of energy, everything falls within the domain of the laws of cycles. Sunrise and sunset, the waxing and waning of the moon, the ebb and flow of the tides, and the seasons of the year all reflect this law. It reminds us there is a time for everything under the sun. All things rise and all things fall. 800 cryptocurrencies are now dead, right? So all things rise and all things fall. 70% of it's record high, right? 800 cryptocurrencies have gone to zero and have been delisted. So this is the total market capitalization of Bitcoin, right? It's lost its value by about 70%. This is the total market capitalization of everything excluding Bitcoin, and it has also lost 80% of its value. So some interesting tweets to understand where we are, right? Adam Draper is son of Tim Draper. So he says, I have no product. I am raising $40 million. The VC says, not interested. Company, but I have an ICO. Do you think you can make room for me? These are real conversations, real conversations. So there was this exchange called Yobit. They publicly announced this. Yobit pump in 21 hours. We're going to pump a new token. It's like ridiculous, right? And then you have this guy. My POV of the SEC statement today. The market is having an outstanding reaction. Exchanges ultimately have three options ahead of them. Delist ICOs, register or close, certainly big implications for each given. So all of these things, right? We've seen a time in which, all kinds of madness and craziness has prevailed. And, it's, we're lucky to be alive and to see all these things, right? So there's a law called Amara's law, which states that we tend to overestimate the effect of a technology in the short run and underestimate. So this whole blockchain revolution is about that, right? In the short term, it's all this hype. Everything is going to zero. But in the long run, it's going to change the world. It's changing societies. It's changing how human beings interact. It's the most disruptive technology in our lifetimes, right? It's the greatest wave of our lifetimes. You'll never see something like this again. So security token is a new wave, right? I mean, it's come out in a big way. Everybody's talking about it. Everybody's trying to make money out of it, milking the cow. So what is it really? So what you basically do is you take an asset, for example, right? So I'll give you an example of a friend from Israel who did one of the first STOs in America. So what they did was they took a hotel, which is called St. Regis Hotel. And they wanted to raise money to build the hotel, right? So what they did was, this hotel is in Aspen, Colorado. They wanted to raise money for real estate. So they created a new company, and that company would hold 18% of the shares. And the valuation based on fair market value was $18 million for the 18% of the shares of that hotel. And the shares of the company got securitized on a security token, and it got traded. So we will see a lot of these things come, right? So when you're a real estate investor, what happens? Unless somebody buys your property, there's no liquidity. And to flip, it's a very hard event. It's once in 5-6 years, you'll find somebody with whom you would be able to change hands, right? So real estate is very liquid. So we'll see a lot of these things come about, where real world assets get held in SPVs, and those SPVs get tokenized, and then it gets traded. So security tokens can offer equity, they can offer dividends, right? There are no dividends on utility tokens, but security tokens can actually offer you a fixed interest rate, 15%, 10%, whatever. You can have profit sharing rights, most importantly, voting rights, right? 70-80% of the people bought Lamborghinis or other fancy cars when they did the ICO, because no voting rights. As a token holder, you have no rights. When you have a security token, if you're a Class A share, you have voting rights. But then the question that you will ask, or you should ask, is if I have 100 token holders in 20 countries, how am I going to conduct a board meeting? Right? So these are all questions that are unanswered. And people are just building the software for it now. So we are talking about the cutting edge right now, right? Security token offerings are the cutting edge. And so what is the difference between the two? So you have ownership of an asset in a security token, and here it's access to a protocol or a DApp, right? Depending on what you're doing. So here investors actually expect profit. Here investors will pray that the tokens will, right? It's invest and pray, right? Yes? How many of you have lost money on utility tokens? Only so many smart people in the room who have not invested. Unbelievable. So I've lost a ton of money, and our friends here have lost a ton of money. So the third one is fully regulated, right? It's regulated by the securities laws of the country. And utility tokens, of course, are the Wild West, right? I mean, it's a gold rush era. In a security token, there are two classes: the security token, which is the investment token, and then the security, which has underlying asset. So investment token is one that behaves like a security and is backed by something tangible, by a real world asset, real estate, gold, diamonds. Security is a financial asset or instrument, right? So like, for example, a bond could be a financial instrument. So what you do is, there are two ways to do it. You actually take a real asset and then tokenize it, or you hold the asset in a company and then you tokenize the shares of the company, right? So this is what I mean. So what is the advantage over STO versus IPO, right? IPOs, who makes the money in IPO? The lawyers. So the lawyers are laughing. It's like the lawyers are laughing, saying the fools have actually realized finally that we are the ones who are making the money, right? And then, so the lawyers and the investment bankers make the money, right? So here there are no middlemen in STO, right? Access to 2 billion unbanked people who can actually participate, depending on which jurisdiction you are in. In the US, you have to be an accredited investor, but there are jurisdictions which are opening up for non-accredited investors to actually invest into security tokens, which is very interesting. Yes?
What should be the cost estimates for launching a IPO?
Well, it depends on the lawyer, right? Well, there's a very good lawyer right here. Maybe you can ask the lawyer. But I think it's typically anywhere between $300,000 to $500,000. Well, compared to an IPO, where you have, it's much more, right? $2-3 million if you want to launch an IPO. You have to make the investor memorandum. You have to, register that with MAS, and do a lot of other things. You have to have somebody with a license to go and market it. You have to go to, and then list it in an exchange. The exchange listing fee here, the exchange listing fees are far more nominal. So, I mean, there are advantages, but the disadvantages as well. If you're a private limited company, you can only have 50 shareholders. Mr. Tontine. He's the most anti-STO man, by the way. He's a good friend of mine, and I know his thing. But it's very important. His views are very important because they're very rational.
I don't think it's accurate to write that you have access to 2 billion on bank. If you think about
into India, you're breaching their laws, so you do not have access to these unbanked investors.
So most of the unbanked investors in India are banked in Switzerland. They've numbered accounts. No, but it's a very useful point that you make, right? So it depends on jurisdictions as well. Certain jurisdictions like Singapore, Gibraltar, they have very clearly laid out securities laws that only allow accredited investors to invest into security token offerings. Whereas we keep hearing news from other places like Malta, Mauritius, Bermuda, where it's actually open for non-accredited investors to actually hold securities. So if that happens, then it might change the game. But you're right. The pool, investor pool is much smaller if it comes to accredited, because you have to have $2 million in the US to be an accredited investor. Very good point, by the way. Right. It's another good point. It's another good point. So security tokens are like, it's like putting lipstick on the pig. Are you happy now? No, I said that to make him happy. No, but in reality, some of these small, I'll tell you the problem, right? In 2015, I started a company in India, an artificial intelligence company. It was featured in pretty much every newspaper in the country. Name a newspaper, it was featured there. It was called Spouse Up. It became the first artificial intelligence company in Asia to basically match people for matrimonial, right? There's 700 million young people in India below the age 35. It got featured everywhere, and got featured by the Economist magazine in the UK. It's a leading innovator. But there's no capital. There's no capital. There's good talent across Southeast Asia, but there's no capital. And the problem with that is that a lot of these VCs and PEs, there are no exits, because there's no secondary markets. There's no small exchanges where you can list startup company shares to trade, right? So what happens in that scenario is that you do not want to force fit a blockchain into your startup and then give utility tokens. But then you have another route, which is to create a secondary market for your shares by offering security token offerings. So that's how you should look at it. And there are some usefulness to that as well, right? So why tokenize? So that was I gave the answer in the previous slide. So fractional ownership of art. I was talking to one of the largest private art collectors in Southeast Asia. He's $400 million plus worth of art. He wants that art is not liquid, it's sitting on his gallery. He wants to create liquidity for it, and he's looking to launch an STO. But the problem right now is that a lot of these exchanges, there is no liquidity, there's no volume. If you go to some of the exchanges that are licensed in Malta or elsewhere, there's less than $1 million worth of trading happening in secondary markets. Because the concept itself is very new, right? So lower issuance fee, increased liquidity, hopefully increased liquidity when people get on board. Hopefully greater market efficiency. It's all, in the cutting edge, right? So these are types of assets that are getting tokenized. So we have, these liquid funds. So this is very interesting because a lot of VCs and PEs are tokenizing their funds. Spice VC, for example, is a venture capital company. So a lot of these venture capital companies are tokenizing, providing dividends on the profits they make. So if equity and mutual funds are tokenizing, Wall Street is going big guns into it. I think $10 billion have already been tokenized. But of course, there's no liquidity. They've just been tokenized. So, and now the second wave will start where there'll be broker-dealers trying to get buyers, for these liquidity pools, right? So real estate, of course, is going to be massive. The first one that I've, I studied, which was done by friends of ours in the US. I think they are going and doing a lot more across Asia and in Europe. So we'll see a lot more real estate projects being tokenized. So what is the difference, right? So we have crypto factors like volume and velocity, which are very important for a security token, right? But you also have asset factors because you have an underlying asset that is securitized. What is a security token? You have some kind of a security, right? This guy in a utility token, they buy Lamborghinis and vanish, but in a security token, you actually have real assets, right? So for the non-crypto people, Lamborghinis are, anybody wants to explain what Lamborghinis? Charles, what is the significance of Lamborghinis in the crypto world? So the whole idea of the ICO is to get rich and buy Lamborghinis, right? So it's not maximizing shareholder value, it's actually to buy Lamborghinis. So I have only 2 more slides left, but I want to get to the bottom of this, right? So the idea here is that you combine existing crypto factors with asset factors to come up with a valuation model. So the existing crypto factors are typically the quantity of the tokens, the frequency at which it's traded that we saw, right? Volume and velocity. But with these new things that are significant or from the old world, from corporate finance world, which is cash flow and dividend, you do a value at risk model, you do collateralization of assets, and then price the asset. You look at liquidity factors, right, for valuing the token. You look at taxation models, because taxation is important, right? A lot of countries do not have capital gains tax. So if you trade securities and if it's being listed in a jurisdiction where there's capital gains tax, or if the company is listed in a jurisdiction where there's capital gains tax, all of that impacts the valuation of the token. And then you have rating criteria by third-party agencies, right? So, if it's a bond instrument or whatever it is, the rating criteria impacts the value of the underlying asset. And then, of course, the insurance models, right? Depending on what you're trying to insure, what kind of asset, that also impacts the price of the token. So the last slide, right? So we've spoken for almost 1.5 hours. We need to summarize it, philosophize it. So this whole token business, the token economy invites a new level of thinking about the possibilities for fundamentally redesigning societies by disintermediating traditional organizations, by opening up, new types of business models, new types of companies. In fact, the first ICO in the world, which was done by J.R. Willett, which is Omni Mastercoin, was done because he couldn't raise money from traditional investors. So we are fundamentally, the whole point of all of this stuff is to do societal design, right? To create greater equality, to be more compassionate, to redistribute wealth and value and all of that stuff. Thank you very much for listening to me, and have a very good evening. We're going to meet outside.